Welcome everybody to Propel. Thank you all for coming. My name is Sam Howie. So Propel is an event that we're running, and it's the first one we've done in London, which is really exciting. It's where we bring in industry colleagues, specialists, to talk about commercial property, to talk about technology, and talk about, I guess, the trends in the market. So thank you everyone for coming. I know we've got an expert property panel that are going to be talking not just about property, about technology, about commercial property, and about things that are happening in the industry. We've got our facilitator, Guy Montague-Jones, who is the Deputy Editor at Property Week and is going to be running the panel this evening. So what I'm going to do is I'm going to pass over to you, Guy. Questions are going to be at the end, so thank you very much.
Thank you very much, Sam. Well, there can be no doubt that the PropTech sector has enjoyed tremendous growth over the last few years. Now sort of barely a week seems to go by without a press release about a new PropTech startup kind of hitting my inbox. But sometimes in the past it has kind of felt as if the sort of PropTech sector is sort of talking a little bit to itself. But I think what's changed probably in the last year and a half is you've really seen the property industry wake up to the potential of technology. And you really started to see the property industry talk to the tech side a lot more. So it's good today that we've got that reflected here. We've got two people from the tech side and two people from the property side. So just starting with the property side, Paul, how have you seen things change sort of over the past decade in terms of use of tech in the property sector?
Well, I'm not going to lie to you, it's changed a lot in the last sort of 15, 20 years that I've been involved in property. And although as you get older, it's harder to remember exactly what it was like back then. So I'm trying my best. Just in terms of what I remember putting deals together back then, it was all about lots of physical files, lots of dusty files, going to lawyers' offices and having an actual data room where there were loads of files. And you'd have your tenancy schedule, you'd have your balance sheets, you'd have due diligence reports. Everything was in one room, and if you were lucky, you were allowed to photocopy it and take it away with you. And what that meant was, from a deal analysis perspective, you had to physically take everything and enter it into your little Excel spreadsheet to try and analyze what deal you might do in the property world. And you have a tenancy schedule. You may have 300 tenants, and someone had to key that in and hopefully key it in accurately as well. And so nothing downloaded to each other, or if it did, the downloading would have been unreliable, and you'd have to make sure it was all, correctly put in again. So it is a lot easier now than it was back then.
And Tom, how are you sort of seeing things from your perspective, looking at property management in particular? How have things been shaken up by technology?
The property side never came to the table for a lot of prop tech players, but a lot of that was the prop tech players' fault. They were making solutions that they had experienced, usually in residential space, where they'd go out there and they'd have a bad experience and they'd go and try and create this piece of software that they thought would be amazing. They'd take it to the markets, but they'd have no sort of understanding of the ecosystem and how that would fit in. And so they wouldn't be able to sell it. And that's a really important part of having a technology company, is to be able to sell it. So there's those sort of players that sort of washed out now, and I see the second wave coming through. So we consider ourselves leaders and a few others who are starting to gain momentum now, because there's a lot to build. If you're doing it in commercial property, particularly in property management, there's a lot to build. And it's hard. You've got to build all the accounting side, all the property side, and you've got to do it well, and you've got to do it on modern architecture, build it in the cloud. And so we spent the last 5-6 years building out all of the, I try not to call it the boring stuff, but it's not that exciting when you're talking about client accounting. But we had to build all those nuts and bolts, that core infrastructure, to now be able to start moving into the really innovative stuff that we want to get into now, which we're really, really excited about. But you have to put a huge amount of investment and energy into that now. So I'm seeing a big difference now that there's players like ourselves who have built that modern technology, really invested the time and the effort and the money into it, to really compete with the older software that's been around for a very long time.
And Julian, how do you see PropTech kind of affecting the commercial property investment market?
I think in the short term, there's probably two areas where I think PropTech's going to have a really profound effect. I think the first one is data. I think one of the things which the property market has woken up to in the last few years, as they've really started engaging with technology, is the fact that we don't really understand data. We don't know what to do with our data, and we don't know how to do it. So I think the first thing that will happen, there'll be a lot of products which help you do that. And I think Re-Leased is a good example in terms of not only collecting your data, but then having access to your data, ownership of your data, the ability to manipulate your data, and ultimately analyze it and create value from it. I think the other thing that we're seeing, certainly at the moment, is a big shift towards efficiency. I think there's a lot more to come in the future, but at the moment, I think if we can get hold of our data and we can be a little bit more efficient, then we'll be winning, because the property market is pretty inefficient and has been for a long time. So that by efficiency, I mean, I think enable us to have a mobile workforce. It's enable us to collaborate across multiple different areas with people who we previously maybe couldn't collaborate with, or either geographically or whatever. And then automation, transparency, a whole heap of different things where PropTech can be brought to bear fruit in real estate in the short term.
What do you think are the dangers of not investing at this stage?
Yeah, I guess there's two sides to it. The pros of not investing, maybe that actually if you sort of wait and see what happens, then you can make fewer mistakes. See where everyone else goes wrong. It's less risky. Real estate's full of people who don't like risk, and there's an argument I still think that is disruptive technology, at least has it reached the tipping point yet where if you're not in it, you're massively at a disadvantage. I don't actually think it has. I think you can be a fairly traditional real estate business in the current market and still compete with very modern, newfangled, efficient, tech-friendly businesses. But I think coming on to the risk of not doing it, I think that shift will change. It will change very quickly, and it will be very difficult to see it changing until it's happened. And I think, if you're on the wrong side of that, will you ever be able to catch up? I mean, we've seen this, I think, in something like the serviced office market, where actually the true, the WeWorks of this world, the serviced office providers are at a level of technological advancement that actually new entrants to the market may never catch, because they've got still such a mark from them. And also from an investor perspective, when we go out and talk to our investors, they want to hear that you're technologically motivated and technology is a big part of your business plan and your strategy. And so if you want to be successful in raising money, I think you need to be tech savvy. And
Tom, one of the sort of challenges, I guess, for technology companies in property is that some property companies don't feel the propulsion to act, do they? They sort of there's more comfortable with the status quo, and potentially worried that if they do make a big investment, it could all go wrong for them. What do you sort of say to that, and how can that be kind of overcome?
Yeah, it's been really interesting in the last, because we've been doing this 5 or 6 years, so it's been really interesting to watch the shift in the last 12 to 24 months. And there has definitely been a shift, because real estate, particularly commercial real estate, has been very stable, generally very risk-free. It's been the same for decades or centuries, really, and there hasn't been a lot of change in there. But in the last couple of years, there's been, and this is not just in the tech pages, this is in everyday business pages, it's reported on, things that are starting to make owners now a little bit more nervous than they've ever been. So something like WeWork coming in, and now lease terms are going down, they're going, oh man, that's getting close to me. Then Amazon Prime kind of knocking out all B-grade retail, and now coming into all the A-grade retail, getting a bit nervous there. Even Airbnb is kind of taking out some of the hospitality. So it's kind of moved from people looking for software like Re-Leased to give them a competitive advantage. We're now getting people coming to us going, okay, actually, can you guys help us out? Because we don't really know what to do, but I don't want to be the person that gets caught here being behind. So you guys look tech savvy, you guys can help us out. So we're seeing people now move out of fear as well, not just out of looking for a technical advantage. So it's quite a powerful shift for us anyway.
And Edward, before coming here, I was looking on our website, and the first mention of PropTech came in, I think, at the end of 2014, where I think we wrote a feature saying, what is PropTech and why should we all care? I think it's fair to say that the term fintech predates PropTech by quite a significant margin, and you're obviously from the financial services sector. Can you talk a little bit about kind of your journey at Xero and how technology has sort of disrupted the financial sector?
You know, I think the starting point, the foundational piece, is that there's massive an analogy to be drawn between accounting and property management. And actually, hearing Paul's answer, dusty folders in rooms, having to travel to actually view data, is where accounting has come from. And Zero's really been part of disrupting the accounting market. We'll run an event next week called ZeroCon. Think of Comic-Con, and our founder Rod Drury decided one day there's no reason we shouldn't have ZeroCon since we have Comic-Con. We will have 3,000 accountants next week at the Excel Centre who pay to come and spend 2 days with us, where we talk about what's going on in the industry. There's lots of thought leadership that goes on, and you think, well, that doesn't sound very accountant-y, right? That doesn't sound like the kind of thing accountants do. It's 48% female. It's very, very forward-looking. And the point is that we are helping our accounting partners to just run much better businesses. So there are lots of great stories, either about people being much more efficient, and so rather than working with the dusty folders, kind of getting their Sunday afternoons back and their Friday evenings back because they're able to work much more effectively, through to actually enabling people just to build very, very different businesses. So moving beyond simply delivering compliance tax, making sure that small businesses pay enough tax, to a point where they can be advising small businesses on their growth, on their IT, on their HR, various aspects that they need. And from a financial services perspective, Zero has kind of become something of a fintech because there are so many adjacent areas to running your finances, whether it's making payments, getting paid more quickly. Actually, something that happened just last night, but it's now in the public domain, is that Zero is registered with the UK Financial Conduct Authority. So just necessarily we're having to move into that kind of fintech space. And we get to then work with a whole bunch of pretty cool companies who are similarly digitally disruptive, either in fintech or in things like kind of prop tech, but lots and lots of analogies.
And then just sort of looking ahead for a moment, next year we've got sort of lots to look forward to. Brexit for one, lots of challenges ahead. I don't know, Paul, how you think technology can maybe help in dealing with some of the challenges that the next couple of years bring, either in terms of new regulations that are out, or is there a tech solution to Brexit?
Yeah, funnily enough, we don't get that concerned about Brexit as a property investor because our underlying occupiers are not that concerned about it. The market in London is very, very strong, and supply. There aren't that many. If you look out the window now, there aren't that many cranes as there have been in the past. You know, the pipeline is fairly fairly good as well in terms of from property perspective. Despite Brexit, things are coming along quite nicely. There's a bigger kind of macro change happening though that we're very conscious of. We talked about WeWork earlier, and it's just part of this general trend that as a company you must have an office or premises that are top notch. And having average accommodation is just not going to cut it anymore. And a few millennials in the audience, maybe even Generation K, I think we're going to call it. These are people who want to experience a day in the office, which is kind of cool and kind of great place to hang out in. My generation growing up was all about actually, you give me the cash and I'll take it, and don't really care what you're going to put me in, what cell you're going to put me in terms of office cell, that is. And so that is changing, and it changes the way that we have to think as landlords and investors about what sort of buildings are we going to produce. And we're right in the market now with a brand new building in Farringdon, and the first question you get from tenants is actually show me the bike store, show me how you get the bikes in the building and how you get them through from the street. Not very techy, but it is. You have to think about things like charging units in the accommodation and the showers so people can power up their devices and what have you. And ultra fast broadband is something that you must have. And in central London, I'm afraid that is really a sticking point for some. And we're an occupier as well. It took 3 months recently to get when we moved offices to get our broadband up to scratch, and that is just not good enough. So any brand new building now, you must have it pre-installed, and it must be ultra fast. And it's not good when in Waiheke Island, where I have a beach house, the broadband is faster there back in New Zealand than it is here in central London, and that is, it's a UK issue that something needs to be done about.
And Julian, just thinking about some of the research that's out there about tech, sometimes it can get a bit scary, can't it? The sort of predictions of kind of half-hour jobs disappearing. How do you think the commercial property sector is going to be affected by those changes in the years to come? Are you worried in terms of the job market or not?
No, actually not at all. I think, I have great belief in us as a race in many ways of making sure that we keep ourselves pretty busy. And if you look at the Industrial Revolution, and everyone thought there'd be no jobs, but out of the Industrial Revolution comes the financial services industry, which has kept a fair few people busy for a fair few years. You look at the internet as a big disruptor. There's millions of people who work in internet-enabled companies which didn't previously exist. So I don't have any great concern about us all sitting around being idle and having nothing to do. I think we'll find things to do, and there'll be whole new industries and whole new jobs which don't currently exist. I think in terms of where do I see this taking us as an industry, I think the biggest change for us personally is that we're going to spend an awful lot less time doing boring stuff and an awful lot more time doing fun stuff or interesting stuff, maybe not fun. I don't know, this is work, isn't it? Where we can add more value and we can bring to bear, our human qualities a little bit more, rather than just data entry and chasing people and doing things which really don't sort of bring us an awful lot of joy. So I think, my sort of company, I guess, of the future is, or 5 years at least, is one where, we bring to bear the benefits of automation and we can sort of unshackle ourselves a little bit from sort of that process piece, which is a big part of a lot of people's jobs.
And just on a sort of day-to-day for you sort of personally, how's tech affecting things there, and how do you see your job changing in the next 5 years?
So I think from an executive basis, it's just information, having much better information. And I think, we're seeing this already. And I think this is going to be a big thing over the next 5 years, is the digitization, especially in real estate, of things which weren't previously digitized. And real estate has been quite well protected from technology by virtue of the fact that, we don't have a homogenous product. And so technology is kind of focused on easier things like accounting, maybe. Is a good example where actually there's a much more rigorous process and the numbers all fit into the same size boxes, maybe. In real estate, everybody always says, oh, you can't possibly do that because that's an office building and not a retail unit or something. So, but what we're seeing in our business is actually, those barriers are now being broken down. Leasing is a good example where, actually the process which was previously in the heads of our letting agents and sort of reported back to us fairly ad hoc on a monthly basis is now digitized at source. And so I get in the morning, and every morning I can see how many viewings we did yesterday, how many properties we put under offer, how many leases we completed, how those terms are relative to our underwritten values. So that level of transparency on an executive basis is huge. And I think there's a lot more to come. And I think that the sort of the second part to that stepping stone will be making those various systems talk to each other. And I think for me, that's kind of my holy grail, I guess, in the next 5 years, is to have a much greater transparency and to have a much more fluid transfer of that information around the business to help us make better decisions.
And Tom, any sort of predictions from you as to where we'll go in the next 5 or 10 years?
I'll do my best not to just repeat exactly what Julian said. To be honest, it was kind of everything I was thinking. We're pretty open about saying that with what we're building, we want to automate every manual job that is in a business like these guys' businesses, basically. If someone's sitting there and their job is entering invoices over and over and over again, we're going to do that. We've already started doing that. And so we want to move, like Julian said, we want to move those roles into higher value roles, more interesting roles. So we're coming for all of that. And so we see the future, there's going to be a lot less sort of manual, laborious work out there. And then connecting all the systems together. So right now, we obviously want everyone to be mobile, and we're working a lot on that. But connecting all these different systems together. So we've already seen the benefit of working with Xero. Connecting the accounting and the property has been huge. Massive for us. Connecting the banking in for us is going to be a really big thing going forward. Connecting in things like insurance companies and leasing, for example. So, we know when all of these properties are coming available, right? But right now, to fill that space, the owner or the manager needs to go and talk to an agent, and that agent will only know about their little pool. So if we can connect all of those requirements together, connect all this together, we're going to have a much more efficient and better market. And so we're really connecting all those sort of siloed databases for us is going to be a really big part of the future, and using that data in a brand new way is going to be very cool.
And if you can pick up on that, it's something that Julian mentioned as well, those sort of apps kind of talking to each other. How can that really sort of transform this industry?
Yeah, so I think you guys have touched on all the key points. Actually, I'm ex-Microsoft, and if you think about what Microsoft did, certainly some of the older people will remember, when word processors were replacing like typewriters and just making it easier to do stuff, right? And that same office automation is now business automation, is what we're talking about. How do we automate the repetitive tasks, and how do we avoid these silos of data? By dint of our scale, so as of earlier this week, we announced we have 1.6 million customers globally now, which means that so it's quite a market presence. We are a very logical player with whom to integrate, and we make it easier for third parties like Re-Leased to integrate with us. We have 730 business application partners today, and that is all about, again, just automating and making more efficient businesses, from farming through prop tech, through dentistry, through core accountancy. And if I see, I guess, some really common patterns, I think there are a pretty small number of platforms that most businesses deal with regularly, being their bank, and we still kind of have to go to our banks to make payments and track cash and do those things. Our accounting platform, and everybody has to do that because we have to pay tax, but actually used well, your accounting platform is a great strategic tool to help you understand your position, your options, and your business platform. And so, again, we've been talking about that. I think you will start to see not only integration, which is where we are now, so that a customer or an invoice is represented consistently across those platforms, but really merging those platforms. And we're beginning to see banks, frankly, offering accounting services. And lots of people, in fact, I was asked today, when is Xero going to be a bank, for example? I think it makes sense that you will just see closer and closer integration, so that actually you can spend time in one experience or one mobile experience and do all the things that you need to do, rather than having to dip in and out of these other experiences. And I think you might start to see some new players crop up as well. So if you think about somebody like Amazon, who has something like 3 million businesses currently, on its business platform, why wouldn't Amazon make it easier for those businesses to access business applications or access accounting? I think we'll start to see some real disruption from some of those big players as well.
And what about Xero itself? Obviously, you're a pretty established business now, but where do you kind of go from here?
Yeah, so again, if you think in typical terms, we think of either horizontal capabilities, so those are the capabilities that are needed by everybody. So that's accounting, that's forecasting, that's reporting. Actually, banking and payments are pretty horizontal, and then there are vertical capabilities. It makes sense for us to grow our footprint in those horizontal areas. So we've recently made an acquisition of a reporting and forecasting data capture tool. We've just raised $300 million for acquisitions and investments that, I think will help us build out in fintech and in some of those horizontal capabilities, but relationships with leaders in key vertical areas like Re-Leased just become more and more important for us. And I think you will see us working more closely with a subset of that large kind of partner base where there's such obvious market synergy, and I would certainly like to think that Re-Leased will be one of those.
Interesting. So also we've talked about where we're sort of going, and in terms of next question, I guess, is how do we get there, and what are the obstacles that you have to overcome? So Julian, just from a sort of practical point of view, how do you go about setting up a strategy to deal with tech? And
yeah, I mean, I think this is something we come across a lot, and we have implemented some prop tech solutions in our business, and it's been a steep learning curve. And I think I find this a lot with our colleagues in the industry, where they sort of say, "Oh, we love the idea of it, but how do we do it?" And I think for what we've learned, or I've learned in the process, is that you've got to start small. You've got to start very specific. You can't take on too much too soon. Keep it simple. So that's sort of the first thing. Then the second thing is, you got to get your house in order. There's no point bringing in, a Re-Leased or any number of the other sort of great prop tech tools out there if the systems and the processes and the data ultimately that they run off is a complete mess. So that's like a massive thing. And I think that's kind of where the property market kind of is at the moment, trying to figure out how they solve that mess so they can bring in the solutions, because the solutions are powerful, but they need a fuel, and that's data. The third part of it is finding really good partners. I'm a big sort of believer in buy, not build. I think that, I'm a chartered surveyor. I'm not a software engineer. And I think that the property market is full of chartered surveyors, and there aren't many software engineers out there. So for now, let's buy and let's not build. But that may well change over time. And I think you've got to find the right partners. You've got to find partners who you can work with. So it's not just buy it off the shelf and then plug it in and sort of watch it and make sort of hope that it works. You've got to find people who you can team up with, and you can mutually benefit each other through sort of development and sort of making each other's products better, because they're relatively, property's new to technology and technology is new to property, so it makes sense to work together. And then I think the integrating piece, which we've all been talking about, I think, which is sort of goes unsaid. You need to make it work. Silos of information, silos of systems and processes just do not deliver the results that you need to see. That will make you a better business. And I think ultimately across all of that, you need to be willing to fail. You need, if you're not willing to fail, you'll never go and do anything exciting, and you'll be behind the curve. And the beauty about a lot of this stuff, especially if you buy and not build, is the cost of failure isn't very high. But what you learn out of it is huge. So I think that's sort of the overriding approach.
And then how do you actually measure how you're getting along? I guess from a property point of view, you're very used to assessing how your property investments are performing. How do you assess how your investment in tech is working?
I think feedback and a lot of analysis. It's a constant evolution, and you have to get into the detail and find out where it's not working properly. I think, it's just constant evolution and revolution and trying to innovate really and see where you can make it better, because a lot of these things, they don't work first time round. But they do need to be measured. It is hard. I have to say it's hard when you invest a certain amount of money into a tech product. If you're relatively early in the cycle of people doing that and trying to be a first mover, quite often the sort of return on your investment is not immediate. You have to be looking long term, and you have to have faith. So it's a difficult part.
Obviously, we've seen quite a lot of startups come on the scene in the property sector in the last sort of 2 or 3 years. Almost every week, as I said, I get a press release about one sort of promising to be the next Uber, and they can't all be the next Uber. What do you think the sort of success and failure rate is likely to be in prop tech? Is there going to be quite a lot of churn, and what are kind of the benchmarks of success?
It's quite easy to go out there and get money off an idea, and as I said earlier, they'll have a very limited experience. Like they might have tried to rent a flat and it's taken 3 days to get a viewing, and that's been a real pain at that time. So they're like, I'm going to invent this app which is going to make viewings really easy, and we're not going to need letting agents anymore. But they have no sort of understanding, because they haven't worked in the property industry or with the property industry, that if you want to take out letting agents, they're their only connection to the tenants. And if you want to go and get every tenant one by one, then you're going to have ads in the tube and things like that to reach them. There's just no way to reach them. There's no distribution. So I think for the ones that will be successful are the ones that understand or work with the property industry to trying to come up with solutions that actually are needed or make a difference, rather than sort of sitting in a garage with some mates who have all had this really bad flatting experience and trying to make something that's cool.
And we've seen quite a few kind of different types of technology company pop up, haven't we? Some sort of doing in the investment markets or peer-to-peer platforms. You've had a lot happen in the property management sector as well. Which parts of the industry do you think tech will make the biggest impact?
Well, as an investor in peer-to-peer lending, I think the whole financial sector is wide open for disruption, as I think probably everyone in the room would agree. But it's really good to see, having worked in a bank, several investment banks and banks in the past, it's good to see them getting it stuck to them actually by smaller companies coming along and actually saying you can't just be in this room as of right. You have to have something that's relevant to people now.
I think some of them will stay on for a very long time doing, because some of these are really massive firms that can sort of survive by themselves for quite a while anyway. But I think, they've survived by having this huge data set to themselves and not sharing it. But now there's going to be a lot of options for people like, say, working with Re-Leased, who are now also going to be able to tap into a massive data set if they choose to. So the way we see it is that we want to provide value to them. So if you share your data with us and allow us to use it, then you're clearly going to get value back from us. And so now they are tapping into, we're giving someone that might manage sort of a few hundred properties access to the same amount of data that CBRE have. It's going to be interesting to see how those companies who have kind of owned it all, how they're going to play going forward, and whether they'll just sort of wrap their arms around it, or whether they'll try and get involved and sort of play with everyone.
Actually, just something's, again, very, very relevant and topical. How many people know of open banking here? There's a few, right? So the UK Competition and Markets Authority did a review of competition and innovation in UK banking, and what they concluded is that actually data at the core is very strategically held by a very small number of banks, and it gives them a huge advantage in the marketplace. And so they've introduced legislation called open banking that means that the 9 biggest banks in the UK now have to stand up APIs that mean that with appropriate consent, regulated third parties can get access to that data. So suddenly you open up the ability to make bank payments from a bunch of different places and access that bank data for things like credit referencing, or we use it within our product. And actually, speaking to the regulators there, I think there's absolutely the possibility that type of regulation will move eventually beyond banking into utilities and a number of other areas, really to legislate to address monopolistic tendencies that are based actually on market presence and on size of customer base, but actually at its core on data. And so I think the whole landscape's really, really interesting how it will evolve.
Interested to get the property perspective on that, because the industry has been a bit slow to sort of share data, hasn't it? There've been efforts for some years to get the sort of banks and lenders to share their data, so we can get a bit of more an insight about where that market's going, and the agencies as well are a bit loath to share their kind of leasing and investment data. Do you think that is really moving now, or?
Yeah, I think it's going to change a lot. I think it's an awakening of the landlords to the fact that actually they have all the assets, and the data should kind of follow the assets, right? It's kind of forced what I was saying earlier about having to have your own data under control before you can implement technology. So I think it's a bit of a circular argument, but it's going to happen. And I don't necessarily agree that the big consultancy firms of the world will go out of business because they don't control that data anymore. I think they can still add value. I think they can add value by pooling data. They can add value by analyzing that data, by creating value out of your own data that you didn't realize. I mean, they have the platform, the scale to have data scientists, where there's not going to be many data scientists in property companies in the near future. So I think there'll just be a whole new data analysis sector really will come out of the property market and will be there. But the ownership of the data, the core control of that data will probably sit more with the landlords. And I think that's a very good thing. I think what I get frustrated, or have been frustrated in the past with the data services businesses, is the quality of their data is very poor. Because it's anecdotal largely. It comes through verbal phone calls and oh yeah, we did a letting, it was 3 months ago, I can't quite remember whether it was 100,000 a year or 1 million. It's that kind of stupid stuff, and so we've looked at it and kind of appraised it, and we kind of think they've always been about 50% accurate. Whereas I think when it comes from the landlord's actual data sets, from the property management systems ultimately, then the quality of that data is way, way higher, because you're invoicing your tenants of it. And if there's one thing landlords are pretty good at doing, it's making sure that they charge the rent. And so you're going to see better quality data in probably more disparate hands, in my view, but with an opportunity to pool that data through certain sources to create insight.
Just to add one thing, I think the UK has actually been pretty good at sharing data amongst landlords and fellow property owners. We do share most of the fundamental things that are happening, and because of that, the UK is a transparent market, and particularly London. We all know what buildings down the street, what they're renting at, what pounds per square foot they're renting at, and what buildings are sold for, at what yield. And that information, for example, isn't available in New York, I understand, in terms of, it's much more of you need that data to be able to transact. In the UK, the fundamental data is there, and it's always served this country very well, because it means if you come in as a foreigner from another country, you can very quickly come up to speed on this market. So where are you going to mobilize your capital to? You're going to mobilize it to here and not to somewhere else. So I would say pushing against an open door in terms of that means sharing data from systems, and most landlords would say, or property owners would say, that's a good thing.
I mean, I think in the short term, we don't have the skill set. Ultimately, I think there's people coming into the industry thick and fast, and I think people in the industry are kind of figuring it all out for themselves and realizing that there's some opportunity there, and there's lots they can do. But I think in terms of actually making it happen, we need to look externally in the short term. But that may well change. I think the property company of the future may have as many developers as it has surveyors.
Is that what's happened in the finance sector?
Yeah, again, it just sounds incredibly analogous. So most of the banks are standing up digital divisions or digital units, but instead of housing them in Canary Wharf, they're housing them in WeWork offices and trying to get that sort of more innovative culture going. But at the end of the day, they're banks, right? So it's kind of hard. Barriers to entry from a technology perspective are just so low now. So again, I don't know how many of you are technologists, but Amazon has a proposition called Amazon Web Services. Microsoft has something similar, where effectively instead of having to kind of build out a data center and rent a bunch of kit to start writing code on, you can just rent it effectively over the web. And so the barriers to entry are low, and there's nothing to stop some guys out of New Zealand with a great idea making enormous progress very quickly. But what that does mean is that there's lots and lots of startups all the time. And I think if there's a theme, as you start to think about how you tackle a problem, an awful lot of propositions are still automating today's processes. So if you take a difficult, clunky, crappy process and automate it, it's still underlying a difficult, crappy process. So it's how can you totally reimagine the way that people do business? So Uber is a great example of that, right? Totally reimagining the way that we order a cab and pay for a cab. There's no money changes hands. It's totally reimagining the experience. And so I have no idea what the opportunities are. I'm sure you guys are exploiting some already, but it's the true disruptors, I think, who'll make real progress.
Good stuff. Well, I think we're sort of running out of time, so just want to thank our panel, and we'll move on to the exciting keynote speaker.